Okay, guys, thanks for joining us here in the charts. This is the Market Beast, Napoleon Macro, Infamous 5. Let's take a quick look. A lot of volatility coming in the market right now, a lot of selling. Some may be saying, is this it? Is this a big crash? Let's take a look at the lines. S&P 500, NASDAQ, SDOW, Dow Jones, and the SPY. So we're going to take a look at those to see how the Fibonacci retracement levels are holding up. So let's not waste time. Let's get into it, guys. Welcome back, loyal family. If you're new here, we only explore price action. Welcome in new subscribers. Let's dive to the charts, shall we? So today's February the 11th, 2022, and the current price, we'll start with the NASDAQ, is going to be $14,316.05, slightly negative 2.6% for the day. Okay, pull up the lines here. Hopefully you guys are doing good. All right, so the NASDAQ continues to show the markets that it is under pressure. So we do have an X mark because I'm assuming everyone has watched our previous video. Hopefully I leave a link. We've been following the infamous 5 for some time. $14,600, okay? Looks like the weekly is struggling to close above 14.6. Is it going to close above it? Well, they have about 4 hours and 50 minutes on this active weekly candle to close. So if today there's like this, this zip tie, it kind of zips back above that level and it closes above 14.6, then that's just the big players buying up the market. I'm not saying that's what's going to happen, but that's the only level for me to understand the next move in the market, 14.6. If it closes below that level today, then seriously, next week must be the most vicious, bullish move in this market, and they will need to close above 14.6. But let's let the market close to assess what's going to happen. I still do think that the market players have an opportunity to close above 14.6, and I'm not just some perma bull trying to justify I'm right about something, guys. 14.6, okay? Let's take it on over to the S&P 500. Current price, $4,445.93, slightly negative 1.2% for the day. All right, we currently do have a check mark for the S&P 500. Again, I'm assuming that everyone watched the previous video. The only thing we're doing is we measure the lows to the highs, and we have our Fibonacci retracement levels, 0.618, 0.786, and the 0.886. So according to the way that I understand price action, as long as the price is above the 0.618, which it's not, but if it's also above the 0.786, these two levels are relevant in my book, and therefore if the price activity is taking place above those two levels in the worst case scenario, obviously the red level being an extreme case, but to keep it practical for now, 0.786 is going to be the level. $4,395, okay? If the price action leading into next week is, let's just say there's a push down, like a little bit more selling pressure, but it's unsuccessful in closing a weekly candle below $4,395. This means that the uptrend is still perfectly intact, and it's likely they're taking this opportunity to consolidate and potentially move the markets higher eventually, okay? Again, next week is just as critical as this week. So again, $4,395 is a critical level for next week for the S&P 500. Let's take it on over to the SPY. Current price of the SPY is $443.15, slightly negative 1.3% for the day. Same setup here, check mark for the SPY because it is above the 0.786 level, which is $441 and precisely 60 cents. So leading into next week, if the market actually closes above that level. So basically, we still got to get a close above that level, but I wanted to stop in while the markets are open to give you guys a heads up on what to look for today, because the weekly candles close today, okay? $441. If it closes above that level, still has a check mark in my book for the SPY. But again, next week is critical. We got to get a push higher or some sort of sideways consolidation, but this downwards pressure must stop, seriously, okay? All right, let's take a look at the Dow Jones. That's going to be $34,899.94, slightly negative 0.9% for the day. And as you can see on the screen, the Dow Jones still has a check mark in my book. I know there's a lot of fear going on out there, guys, but you know me, I stepped on the other side. Take a look at the lines, all right? $34,646, precisely 63 cents for the 0.786 level. So the Dow Jones has a check mark so far. Let's see how it closes. Last but not least, let's take a look at our last one on the menu for our infamous 5, and that is going to be the SDOW right here. It's going to be $28.99, slightly positive 3.3% for the day. Remember, the SDOW goes up if the S&P 500 goes down. So far, the SDOW is below 2950. So far, it still has a check mark in my book, assuming that it closes below that level. But one thing that I will say is if there's more bullish momentum in the SDOW and it actually breaks above the 2950 and then it uses it as support, yeah, that's actually a pretty interesting sign for the S&P 500, because one of the concerning things for me is it has broken through that 610-day resistance level that I was following. And typically when you break beyond a resistance level, a pretty old resistance level, you get a really aggressive thrust to the upside. But it has not happened just yet, with the exception of this small little, I mean, it's not that small, right? It's a pretty reasonable move out of beyond that resistance level. Let's measure it and see how much it is. It's about 21%. But nevertheless, this SDOW, if it's in preparation to move higher, there's two things it must do. Well, three things. First thing is it must not make a new low. Okay, new low is going to be lower than $24 and about 73 cents. Second thing is it must make a higher low, which is essentially kind of the same thing as number one, right? Well, not really. It must make a higher low, number two. Okay, so far it has made a higher low. Okay, and the third thing, of course, would be for it to break above and stay above 2950. Okay, so with those three components of the SDOW, that is going to be a bearish sign for the S&P 500, and it's likely the market will continue lower. Hopefully you guys have all the levels. Hopefully you guys are staying level-headed out there. Hopefully you guys are taking notes for the infamous 5 to show you guys that we have 4 check marks out of 5. So according to the way that I see everything, the only thing that's under an immense amount of pressure that I do think that we mentioned a few times is the NASDAQ. So let's see if the NASDAQ is going to kind of, not correlate with the market and just kind of, dump off or something, so to speak, with the lack of a better term, or if it actually is going to push higher next week and finally accomplish that 14.6. But again, the final assessment is everything still looks fine with the exception of the NASDAQ, assuming that it holds above the 0.786 levels that we went over. And that's all I have for you wonderful folks. So hopefully you enjoy that. If you guys don't mind doing me a huge favor before you go, simply leaving an appropriate thumb below the video, I would truly appreciate that. Also leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your support, all of you. If you guys are new, we also explored the alternative markets, Bitcoin, altcoins. You can kindly subscribe with us, hit the bell, and we'll send that out to you momentarily. I'd like to take this opportunity to thank you all for your time. Remember, guys, you're going to need a strategy if you're into markets, okay? And especially now, right, with the markets going down. Keep that positive energy flowing. We'll talk soon, and bye for now, guys and gals.